Hi everyone, thank you for joining us today. My name is Sebastian from the advisory team, and I will be the moderator for today's session. Joining us today is our head of distribution, Sebastian, who will be walking us through Syfe's latest launch, the Cash Plus portfolio. So he will be sharing on the key features of the Cash Plus portfolio, its advantages and disadvantages, if any. And of course, you can then decide if this is the portfolio that you want. So let's get this rolling, and I will now hand this over to Sebastian.
Cool. Thank you very much for the introduction. Hello and welcome everyone. Thanks for joining us for our Syfe Cash Plus session tonight. And with this said, let's go right into it. And we start with a very quick 2 or 3 slides on about Syfe, who we are and what we have done so far. We exist since 2017. In July 2019, we got licensed and we started operating publicly here in Singapore. Since then, we have launched a whole set of new portfolios and also established our wealth expert team. And Xuan is part of this team, and she'll be able to answer a lot of your questions. So we'll do a mix of some questions we'll answer live, and some questions Xuan will answer directly in the chat. Feel free to use the Q&A tab at the bottom of your screen to share the questions. Yes, and as we already mentioned, our latest launch actually was just 2 weeks ago, which is our Cash Plus portfolio, and this is what we will be focusing on today. A few of our executive team you can find here on the right. There is Drew, our founder and CEO, who founded Syfe after leaving UBS, where he spent the majority of her career based out of Hong Kong. Richard, who looks back at a very long and successful career with companies such as Lion, but also has been an adjunct professor at NUS. And Rita, who joined us from Goldman Sachs, who's heading our investment advisory team. We are licensed by the MES under a retail fund management license. This allows us to invest and build discretionary portfolios for individuals who mostly here in Singapore, but theoretically all around the world. We are using DBS as the bank for our trust account. So this is the account where investors transfer their funds before we use them to invest them through our broker, which is Saxo Capital Markets, and Citi and HSBC, which are our custodians and who ensure that all the securities we purchase or which are as part of your portfolios are securely stored and you know, always accessible if need be. Our portfolio offering is focused on different objectives, and we are currently having 4 different portfolio types. Today, we will spend most of the time on Cash Plus, and I don't want to go into any details on this slide, but just give a very quick overview about the other 3 portfolio types. There's REIT Plus, our highly popular real estate investment trust focused portfolio, which provides great dividend yield as well as potential capital appreciation. We are tracking the IHS REIT Leaders Index, which is an index published by the IH team of SGX, of the Singapore Exchange. As I mentioned, it gives great dividends, but also growth or capital appreciation. You can choose between 2 different portfolio options. One is a 100% REIT portfolio, and the other alternative would be a risk-managed portfolio. That means we blend it with some Singapore government bonds, and by doing so, we can reduce the volatility and we reduce the fluctuation of your portfolio value. Just one last sentence about what are the underlying REITs in the portfolio. It's assets tracking the IHS with leaders index, and we are using the 20 largest and most liquid REITs to track this index. And then we have two growth-focused portfolios. One is the global ARI portfolio, which allows you to choose between 11 different risk levels, from a very conservative or very defensive portfolio with a lot of bonds to a more risky portfolio, but with a higher chance of significant growth or higher returns. All of these portfolios consist of equities, so stocks, as well as bonds and gold. This allows us to diversify across like asset classes, like these are these three asset classes which are in the portfolio, but we also diversify across geographies as well as different industries. And then our equity 100 portfolio is a pure equity portfolio, meaning 100% of the portfolio invests in equities, stocks, about 1,500 different companies all across the world. And we use a smart beta strategy to deliver better risk-adjusted returns. I'm happy to answer a few questions on this, but for the time being, I want to move on and talk a little bit about why do we think there was a need to create a cash plus portfolio. There are a couple of cash management options already in the market. And I don't want to go into detail of any specific one, but they range anywhere between a bank account as little as 0.05% per annum, all the way to maybe 1.6, 1.5, 1.6% per annum in returns. And something which we also saw that especially bank accounts, but even some of the current cash management options available, they come with a lot of different requirements or restrictions. What do I mean by that? It's like a lot of fine print, such as they have a minimum amount of X $1,000. They only pay a certain interest rate up to a specific limit. They sometimes come with fixed deposits, of course, come with a certain duration until which you can't take it out, and all these kind of things. So we have tried to build something which allows people to have a return, an inflation-beating return at a very, very low risk without a lot of these limitations of the alternatives out there. So introducing Syfe's Cash Plus portfolio. Let's go through some of the highlights or some of the features of this portfolio. The projected yield is 1.75% per annum. And this yield is accrued on a daily basis. That means that in your Syfe app or on your Syfe web dashboard, you'll be able to see the value of your deposit or the value of your portfolio go up every single day by a certain return which you got in this one day. So unlike many other things where you get the return maybe like every month or every quarter or sometimes even like annually, you basically accrue these returns on a daily basis, and you'll see this also reflected in your account. The yield we provide is a projected yield. So yes, this yield can go up or down a little bit, but These are the latest data which we have from, which is based on the underlying mostly bonds or all bonds which are in this portfolio. We'll speak about this a little bit more in a bit. There is no minimum investment amount. So it's completely up to you if you start with $1 or $1 million. There is no minimum, and there is also no maximum or no limits. So the projected rate applies on all your deposits without any limits or tiers, right? So unlike many other places where you get maybe 2% on the first 10,000, but then you have a lower rate for everything above this 10,000, our projected return will be applied on the full amount. This is regardless if it's $1 or $1 million. There is no lockup period, so you will always have access to your funds whenever you might need them. There's unlimited free withdrawals, as well as, of course, free deposits. So you can deposit or withdraw at any time without any fee or any extra charges. And I think the portfolio is also quite popular with our existing clients who are invested into some of the other portfolios I shared earlier. And we have, of course, made sure that it is very convenient and very easy to transfer funds between the Cash Plus portfolio and other portfolios. So one way of, for example, of what you can, for example, do is that you say, I put a lump sum in my Cash Plus portfolio, and then every month you transfer a certain amount into, for example, your Read Plus portfolio. And there is a feature coming soon which will make this even easier. So what the automatic recurring transfers will allow you is that you set or you define on what frequency, what amount do you want to transfer between your portfolios. So you can schedule payments or you can schedule transfers from your Cash Plus portfolio into one of the other portfolios. So you're basically automating your dollar cost averaging. And at the same time, you earn very good returns while your funds are in the Cash Plus portfolio. I want to stop here quickly to answer some of the questions while we still see here the overview slide.
Yep. So thanks, Sebastian. There are two questions that I'd like to check in with you. Number one is actually whether or not there's any rebalancing for the three underlying funds for this Cash Plus portfolio.
Yeah, it's a very good question. Yes, there are three underlying funds, and we come to those in, I think, just in one of the next slides, and we'll share what are the three underlying funds and why do we use them and so on. No, there's no rebalancing planned. There won't be any rebalancing really happening. With this kind of products, which are the underlyings, it won't also really be required because they will all, rebalancing is required if one part of your portfolio significantly outgrows other parts of your portfolio, and the allocation will significantly differ from the target allocation, right? For a portfolio like this, where the underlying funds might be, there's going to be a difference of less than 1% or percentage points in terms of returns. So it will take a very long time until there is a significant difference versus the target allocation, which means rebalancing is not really required.
Okay. So right now, there are a lot of other competitors offering similar kind of cash management product. So would you be able to share with us how does Syfe actually compare with the rest of them?
Yeah. I mean, I think we have shared a table earlier on what are the existing options out there. I think one thing is like this cannot be the Syfe Cash Plus offering is not a bank account. So there is no SDIC insurance, for example. So it should not be confused with a bank account. But if you then look at what is the projected return, then you also can see that this is significantly higher, not only compared to a bank account, but also compared to most other providers who offer cash management solutions. The reason for this is the funds which we have picked, which are the underlyings of the Syfe Cash Management solution. We believe the allocation between these three funds and which funds we have picked is an ideal mix of the return as well as risk. We believe that there is still a very, very minimal risk considering the returns you can get. And I'll go into a little bit of more details once we look at the specific funds.
Okay, sounds great. So I think we can take a pause on the Q&A first, and we can continue with the slides.
Great. Yes, let's do that. Yes, I just want to like one more time, just in 30 seconds, recap for everyone who just joined now, the highlights. So the Cash Plus portfolio has a projected yield of 1.75% per annum. The returns are accrued daily. Basically, you can see daily the value of your portfolio go up. You can very easily transfer funds across portfolios. So if you have multiple portfolios with Syfe, you can very easily transfer them between the different portfolios. There is an automation for these transfers coming very soon, which will make it even easier. There's no minimum or maximum amount for you to invest. So regardless if you invest $1 or $1 million, you will earn the projected yield on your deposit. And there's also no lockup period. So you can withdraw this amount anytime and how often you want. We have already mentioned a couple of times that there are three funds which comprise this portfolio. And there is the Lion Global Singapore Dollar Money Market Fund. There's the Lion Global Singapore Dollar Enhanced Liquidity Fund. And there's the Lion Global Short Duration Bond Fund. Let's start with the first one, which is the Money Market Fund. This is consists of high quality short-term money market instruments such as commercial bills and deposits with financial institutions. Right? So this is the ultra safe component of the portfolio. Then in order to boost a little bit the yield of the portfolio, we allocate 35% to an enhanced liquidity fund. This is high quality debt instruments with a weighted average portfolio credit rating of A-, yeah? And a weighted average duration of around 12 months. What does this mean? This means like A-, this means so it's mostly like government or it's government issued bonds, right? And as you know, like Singapore government, and because this is Singapore dollar, is one of the most highly regarded like government bonds in the world, or like considered among the 5 lowest risk government bonds in the world, and comes with a rating of A-, which is pretty much says like that there is very, very low risk. And what makes what even further reduces the risk is the very short average duration. And what this average duration means is that in 12 months, these bonds mature. So it means in 12 months, the government will return their funds, yeah, like the principal, including the coupon, to the lender, right? In this case, basically the investor in these bonds, right? So the shorter this duration is, the more safe it is, because the longer it is, the more uncertainty there is. So if you have invest in a very short duration, this reduces the risk further. So it basically means the issuer is already of high quality, but then on top they also have a short duration, which even reduces the risk further. And then we come to the short duration bond fund. So this invests in Singapore and international bonds of, again, high quality issuers, right? So this is a mix of corporate and government bonds, but a lot of the corporates are actually state-owned enterprises. Yeah? And it says international, yes, because there is a certain exposure to other markets as well. But all of, even if this is issued in US dollar, for example, it's Singapore dollar hedged, so there's absolutely no currency risk in there. And also this is purely investment grade bonds, and no high yield bonds or any of this of a higher risk. So generally, yes, there is different components of different risk levels, but all of those can be considered a very low risk bonds. Let's talk a little bit about our own fees. We have decided that we are not charging management fees for this portfolio. As some of you might be aware, we are charging management fees for our other portfolios, which is a fixed all-inclusive fee, which you charge on it's an annual fee, but we basically charge it on a daily basis. So you only be charged for the time you invested with us. But for a cash plus portfolio, we are not charging anything. And the reason for this is because we see this as an ideal entry level or an entry proposition for people who want to start investing with us. And not only this, but we also return 100% of the trailer fee rebates which we get from Lion Global, who is the fund manager of our portfolios. So I want to show this quickly, and then I think we pause again for some questions. The cross-projected returns of the combination of these three funds in 30, 35, and 35% allocations generates 1.8% return per annum, projected return per annum. We are charged 35 basis points or 0.35% fee by Lion Global for managing these funds. But we return 30% of this back to our clients. So the full amount which we receive as a trader fee from the fund manager, we return. We are charging no management fee, and as a result, the projected return per annum is 1.75%. Maybe we pause here for some questions.
Yeah, thanks, Sebastian. So I think you talk a lot about, what kind of risk potentially this cash plus portfolio has. But would you be able to, give us some numbers in terms of what could be the worst case scenario?
Yeah, that's of course a very good question, right? I think the important part to understand there is these are short duration bonds. So investors only lose their funds if within this short period of time the issuer would go bankrupt. Meaning, like, they are defaulting, their stock price goes to zero. So now if you invest in equities, stock prices fluctuate a lot, and if they go down once, they might not ever go back up to the original price, but they might stay there forever or for a very long time. With bonds, this is different. If they don't go bankrupt, and this is kind of the worst case scenario, their price has to go back, or like the price of this bond has to go back until by the time the bond matures. So the price will eventually go back up. It's very different to a stock, right? Where you don't know if the price will ever gonna recover.
Yes, exactly. Yeah, and I think also one more point to add is also because the underlying funds, one of them, which is the short duration bond fund, the maturity of these bonds are 24 months. Okay, so meaning to say that, you know, they are held for very, very short term, and, you know, assuming that there's no default, they are likely to mature at par. Okay, meaning to say that you will receive back your capital upon, you know, when the bonds mature itself.
Exactly, right. And as I also mentioned earlier, most of them are governments, and in case of the short duration bond is also corporates, but many of them are state-owned enterprises, right? So they are also government-linked companies where a default is even less likely than, you know, on some other investment grade corporates.
Yeah. We actually saw like a stock market crash in 2020, right? So during March. So would you be able to share with us whether or not there was any underlying company bonds that, you know, defaulted during that period of time?
Yeah. No, while this was, I think, as everyone knows, a very big market correction in February and March of last year caused by the COVID pandemic, there were no underlyings who defaulted. So out of hundreds of different companies, which are, you know, the issuers of the bonds, none of them actually defaulted. And the return of all three underlying funds for the year 2020 was significantly in the plus, right? Which I think we all know is not the case for all equities, right? But for those funds, despite this market correction and despite this quite significant economic impact this pandemic had, all of them actually netted positive for 2020.
Okay. I have this very interesting question because, you know, we were sharing with clients how like the projected yield is 1.75%. So this client actually asked us, you know, if let's say the actual return is more than 1.75%, will it be, you know, credited to customers as a bonus, for example?
Yes, it's a very good question. Yes, so there's not only the worst case scenario, but there's also like scenarios where it's
exactly,
actually
right?
better than expected. Yes, and our point is we will always give whatever the funds earn, and we are committed to not charge a management fee on this funds and return whatever trailer fee we receive from the fund manager. So yes, there is a good chance with increasing, and currently it looks like the interest rates are increasing a little bit again. The US Treasury is increasing, and the 10 years are above 1% again, or around 1%. So there's a good chance that actually in the not too distant future, the yield will actually go up above this 1.75%.
Okay, so maybe one last question, you know, before we head back to our presentation. Can clients actually use the SRS account for this Cash Plus portfolio?
Yeah, that's something which I think is requested by many of our clients, and therefore we are working on this, and we want to allow SRS funds, or we want to allow SRS to be used to invest in not only our Cash Plus portfolio, but also other portfolios. But currently this is not possible. But I hope in some time this year, we will allow for the supplementary retirement scheme to be used to invest as well.
Sounds good. I have many clients looking at that as well, and we can't wait for it.
Yes, I understand.
Okay, thanks, Sebastian.
Cool. Yeah, let us move on. Sorry, we haven't yet spoken about this slide, and I think it's an important one to understand a little bit the differences, right? If you look about our overall offering of different products, then in terms of risk level, then you can see that like Cash Plus is really on the lower risk side, right? We want to provide people an alternative to their bank account where they still make enough to at least beat inflation, or to at least preserve their capital at a very, very low risk. On the other side of the spectrum, there's the Equity 100 portfolio. Is 100% equities portfolio. So the risk there is of course higher, but of course potentially the returns as well. And for our global and REIT portfolios, they are somewhere in between, especially the REIT portfolio with the risk management option. You can basically, you don't have 100% equities, but you can limit your risk a little bit and have a little bit less fluctuations and less volatility. And for global RE, you can basically adjust the risk level which you think is right for you to match what really is right for you. So from, let's say, somewhere like a medium risk to a higher risk, already similar to an Equity 100 portfolio. The difference is that even their higher risk portfolio contains a mix of also a little bit of bonds and some gold. So I think this is the slide I showed in the very beginning, and so everyone can have a quick look here themselves. I think we are priding ourselves of two things. One is, of course, the projected yield of 1.75% per annum, as well as that our portfolio or our product comes without many of the limitations and requirements which some of the alternatives would have. I think before we go to this, I see there is like quite a few more questions coming in. Let us try to answer some more of them.
Okay, sounds good. So we actually spoke about, the management fee per se. So there is this client who actually asked whether or not holding this Cash Plus portfolio adds to the total amount in terms of the pricing.
No. Sorry, yeah, then I do go to the next slide to explain that. I think it's a very good question, but I shared earlier that we're actually not charging a management fee on the cash product, right? You can see on the right side, there's the management fee is absolutely zero. We are not earning any money with our Cash Plus product. As a result of this, the deposits made into the Cash Plus product do not contribute to the tiering of our other portfolios. So if you have $15,000 invested with us in, let's say, a REIT portfolio, and you put an extra $5,000 in the Cash Plus, you would not move up from the blue tier to the black tier, because you would still be considered to have invested $15,000 with us, which I think is fair considering that we are not charging a management fee. As we are already on this topic, maybe I'll also share the rest in terms of pricing. We are charging between 0.65 to 0.4% per annum, depending on how much you invest into the other portfolios. You can start with as little as $1, which means you're in the blue tier and you will be charged 0.65%. As of $20,000, you'll be charged 0.5%. And as of $100,000, you'll be charged 0.4%. For investments above $500,000, we'll appreciate if you would get in touch with us, as there is a few extra steps to be taken, but also a few extra benefits which we provide. Yeah. I think something which is really special about Syfe, and part of why we are seeing such good response from consumers, is really our access to wealth experts. Joshua and her colleagues help with like a lot of your questions. They can also be a bit more specific to your situation, and they really will help you with all your questions which you might have. And also there, basically for below 20,000, you'll have access, but it's limited to the first month. For everything above an investment of 20,000, you'll have ongoing access. And for gold tier clients, you'll have a dedicated expert which who you can reach out to at any time.
Right. So I think on this note, there is one leading question. Okay, so if Syfe is actually, returning and doing all the rebates for the Cash Plus portfolio, we have a couple of concerned clients, that says, okay, then how does Syfe actually earn from this product offering? So would you be able to enlighten us?
Yeah, as I mentioned earlier, right? For us, Cash Plus is an entry proposition for clients who want to start invest with Syfe and who want to experience our platform. And while there is absolutely no rules about this, that you have to invest in any of our other portfolios, we hope that once you experience the Syfe platform yourself, you'll be convinced and also start investing in in the other portfolio options we have. As said, absolutely, you are not forced to do this or anything like that. If you prefer to only have a Cash Plus portfolio, that's also completely okay. But that's the reason why we offer this Cash Plus portfolio without charging anything for this specifically. Who knows? We hope, at some point interest rates will go up. Maybe this gives more room, but I think I think there's other ways on how we are able to justify fees which we do on our investment portfolios rather than the Cash Plus, the Cash Plus portfolio. Maybe one question which I saw earlier, someone was asking or concerned about Saxo. What would happen if there's any, if anything would happen to Saxo Bank as our broker? So for Cash Plus, this would have absolutely zero impact because we are investing directly with Lion Global. We are investing in their institutional share class, which we do directly through Lion Global without any intermediary. Lion Global, similar to our other portfolios, then custodizes all the assets with HSBC, and in case of some of our US assets with Citi. So actually, so for Cash Plus, absolutely no impact at all. But even for other portfolios, this would not be would not have any impact. And to already to immediately also address the point, what would happen if anything happens to Syfe? I think one, there's no risk as we are very well funded, and we just closed the $25 million funding round only 3 months ago. But also, even in this worst case situation, that's something was happened to us. I think the requirements MAS put in place would protect our customers' assets, right? And so basically, even if we would go bankrupt, it would not affect the assets of our clients. Cool. Let me talk a little bit about the last few slides before we answer the rest of the questions. How does it work? So you basically download the Syfe app, or you use the Syfe web application by going to www.syfe.com, and you would, in the first step, actually go through a portfolio through a few questions, which will give you a portfolio recommendation, right? You can basically choose Cash Plus, but of course also all the other portfolios which you might find interesting. Upon that, you'll have to verify your identity using My Info if you have. That is the fastest option. It will take you, I think, less than a minute to give us all the information which we require. Alternatively, you can verify manually by uploading an NRSC or like an ID card and a proof of address. By the way, you can be we are open to clients from all countries. If you live here in Singapore, you can use My Info. If you're outside Singapore as well, you can just not use My Info, but you need to verify manually. Once you have made a decision and you fund the portfolio, and by the way, you will see all the information prior to making this decision. So you will be able to see what's in the portfolio, what are the historical returns, what is the forecast of this portfolio, what are the costs of the portfolio. All this you will basically see before you need to sign up. If you then sign up and fund the portfolio, you'll be able to monitor your portfolio on a daily basis, and you can see how your Cash Plus portfolio grows over time, or how our other portfolios perform, and take all the actions right from there, regardless if it's transfers between different portfolios, new deposits, or anything like that. I think we can skip this. We have already discussed pricing. I think this is also something which we have covered as part of pricing already. Please take the opportunity to talk to one of our Syfe wealth experts. As mentioned, they'll be able to go a bit more into your individual situation. We'll be able to answer all your questions about the Syfe portfolios and help you to understand them, understand the options with Syfe better. By the way, you can do this. The easiest way to do that is just like by going on our website in the and you can right away actually schedule an appointment. You can pick a time yourself. You just put how you want to be contacted, and someone will get in touch with you at their chosen time. Which brings us actually already to the end, but before I share about the upcoming webinars, maybe we'll go through the rest of the questions.
Yeah, I think we have covered most of the questions in our earlier discussion, but perhaps I will just have one more question over here. We mentioned about how the returns are projected, right? But at the same time, it is daily accrued. So does it mean that daily accrual is also just an estimate?
It's a very good question. No, the daily accrual does not mean it's an estimate. It's actually it uses the latest NAV, net asset value of the funds we are using, right? So it will give you the current price or current value of your portfolio, right? But what it means that it can be that like one day goes up a little bit more, one day goes up a little bit less, and so on, right? Yeah, so it's not what you see on your portfolio on a daily basis is not an estimate, it's the actual value of the portfolio. And even the 1.75, like this is like basically right now with bonds, we know at the current value, what is their yield to maturity. And based on this is calculated. So we can't tell you exactly what is the projected yield. And as we also covered there, these underlyings, there is some level of risk, even though it's very, very low, there is some level of risk and it can theoretically, it can fluctuate. But what you see on a daily basis in your account is the actual value of the underlying funds at this day. Yeah.
Exactly. I think it's a very straightforward portfolio. Basically, I would recommend clients to get it open, set up. They can always, track the value of it. You can see the interest being accrued and added into like the portfolio on a daily basis. So I think, more importantly is really to get your account set up, and then you can, see how the interface actually work for you.
Yeah. And then I think like there's a few questions which I wanna like still answer, which I saw here is like someone is asking like and I don't say which bank it is, but they say like, my daily withdrawal limit is $200,000, right? Is there any maximum withdrawal per day for Syfe Cash Plus? And there's absolutely no maximum, right? Like it really doesn't matter if it's $1 or $1 million or even $5 million. You'll be able to withdraw this on a daily basis. You can. The only difference is that it takes about 3 days until it reaches your bank account. So you can do it at any given time, but both so it takes about 2 to 3 days until it is invested, and about 3 days until from the moment you basically request the funds until they're back in your bank account. And for full so this, but there's absolutely no limits, right?
Correct. And there's just another question over here, which I think you also covered. It is liquid. Okay, definitely you can deposit and withdraw any point of time. Just that it will take about 2 to 4 working days. Okay, before it actually reaches your bank account.
Yes. So as I mentioned, so it takes 2 days or a maximum of 3 days until it is invested. This depends on the time of the day when you're doing it. There are certain cut-off of times. If you do it before 11 a.m., it will be invested within 2 days. If you do the transfer before 11 a.m., it will be invested in 2 days. If you do it after 11 a.m., it will take 3 days. And the same is for the withdrawal, right? This mostly has to do with why is that like that? Because the fund manager needs to sell the underlying funds, right? So it needs to sell the bonds which are which basically the underlying securities of your portfolio, and this will happen basically on the day after. And once this happens, they'll transfer this back to our trust account. And from the trust account, it will go back to your bank account, right? And there's one other question where someone asked, like, if the projected yield is 1.75% now, what would be the current yield, right? So the current yield is 1.75%, right? And with the duration of the bonds which make up this portfolio, this will stay at this level for the next few months, right? So we cannot guarantee a yield, like far into the future, but this is at least the yield which is currently and which we don't see to change over the next few months.
Correct. And in fact, with regards to like the underlying bond funds, because the bonds are bought and not used for trading, right? So therefore, it is actually held to maturity. Whatever that we have projected, okay, is likely to be realized.
Yeah. So the only reason why it changes is once bonds mature, they'll replace them with they'll buy other bonds, right, to replace them, and then of course the new like the yield will change, but there's also a chance that it will go up, right? Because right now, as I mentioned earlier, the US Treasuries are a bit increasing again in terms of interest rate. So there might also, there's a good chance that this will also mean that other bonds will again increase in yield. And for, and maybe in a month or 2 months, once these new bonds come into the portfolio, that they will actually increase the yield of the portfolio.
Correct. I think maybe just one last question before we can continue to the last part of the slides. Since there is a 3 days gap for the funds to be credited, okay, will the portfolio value actually fluctuate?
Yeah, so I think the question there is, if I now see on my portfolio in my app that the portfolio value is, let's say, $20,000, and I now press on withdraw, will I receive exactly this $20,000? The answer to that is there will be a very, very small deviation from this, but this deviation will be really like very, very minor. What is the reason for this is every day basically we receive from the fund manager the updated prices, and we basically reflect this on your portfolio. If you make a withdrawal request, on the day after, the bonds will be sold, and there might be a small change in terms of price from one day to the other. But as these are not equities, these fluctuations will be very, very minimal. So unlike equities, which might go up by 1% or 2 or 3 from one day to the other, the changes from one day to the other will be very, very small. And actually, most likely, you'll receive more than you saw on your dashboard because you accrued 1 extra day of returns. So the chances is actually high that you will get more than what you saw on the day of when you actually made the withdrawal. Yeah, that said, I think we have answered most of the questions. I just want to tell you about 2 of our upcoming webinars for the next 2 weeks. One is a deep dive into our investment strategy with Richard Ye, our head of portfolio construction and risk management. I can promise you this will be a very entertaining as well as very interesting session with Richard next week. And the week after, on February 4, there will be a market outlook for Q1 by Ritesh Ganeriwal, our head of investment advisory. I think also highly recommended. That said, if there is no further question, then I think we're coming to an end of today's session.
Yeah, I think so too. So I hope that, this session has given our viewers better insights into our Cash Plus portfolio. A recording of today's session will also be uploaded on our Facebook page. As Sebastian mentioned, do join us for our upcoming webinars. We look forward to your continued support and trust in Syfe. And yeah, take care and have a restful evening.
Thank you and have a good evening.
Thank you. Bye, guys. See ya.